Welcome back. For today's deep dive, we are getting into a really complex, almost contradictory stack of forecasts for the UK residential market.
We are. We're looking at reports from JLL, Knight Frank, and Savills covering 2024 and 2025.
And the big question we're tackling is this strange paradox. How can the UK housing market be heading for this massive boom while its most exclusive segment is forecasting a pretty sharp crash?
Exactly.
Because if you zoom way out, the confidence seems huge. I mean, JLL's macro picture is incredibly optimistic.
Oh, tremendously.
They're calling for what, a 20% growth in UK house prices over the next 5 years? They even called that the new normal.
That is the big institutional line, yes. But, and this is the key, if we drill right down into prime central London PCL, as we call it, the story just completely fractures.
It's its own little ecosystem.
It operates on its own gravity well. It's so much more sensitive to, global capital flows and just raw psychology than the mainstream market.
And all the big players saw this coming.
That's what's so fascinating. The top consultancies, they reached a negative consensus pretty quickly for that high-end market. Savills in late 2024, Knight Frank in mid-2025. They both agreed a correction was coming for PCL.
Okay, so what was the specific projected damage? What was the number?
4%. Both suggested PCL prices were likely to fall by 4% in 2025.
And did they say why?
Knight Frank was very explicit. They put it down to two things. A combination of elevated supply that frankly just wasn't moving, and this is the critical part, faltering confidence.
Hold on. If the very top of the market, PCL, is correcting by 4% because of faltering confidence, doesn't that sort of undermine the entire idea of a new normal 20% confidence boom for everyone else?
It creates a real tension, doesn't it?
You have to reconcile those two things.
You do. The sources really paint PCL as the canary in the coal mine. It's showing this acute sensitivity to things like interest rate jitters and political stability. That minus 4% is what happens when that high net worth capital just freezes.
So they're waiting on the sideline.
Exactly. And that creates a confidence gap between the big long-term plans and what individuals are actually doing with their money right now.
So after the market absorbs that 4% dip, what happens? Do we just keep spiraling?
Well, this is where the newest data becomes so important.
Yeah.
JLL put out an update towards the end of 2025, and that really provided the turning point.
What did they say?
They projected that PCL price declines are expected to, and this is their phrase, bottom out early in 2026.
Okay, so the pain is temporary.
It implies it's a transient thing, yes.
Yeah.
Short, sharp correction.
And even during that correction, the market didn't just seize up completely. I mean, wealthy people were still buying and selling houses.
Absolutely. The money was still moving, just at revised expectations.
Mm-hmm.
The 2025 Super Prime Deal Digest really highlighted this. It wasn't a freeze. It was a repricing.
Right.
We saw something like 35 major London sales, everywhere from Chelsea up to Hampstead, and about 15 big country sales, from Shropshire to Surrey. So deals got done, but the power had shifted completely to the buyer.
Okay, so if you're trying to make sense of all these mixed signals, what are the two core takeaways we need to hold on to?
I think so, yeah.
First, there's this massive long-term confidence in the UK housing economy as a whole. That's the plus 20% forecast.
Right, the big picture.
But second, the short-term prime market showed some real vulnerability. It took a 4% hit, fueled mainly by that crisis of confidence and too much supply. But the bottom of that dip is now supposedly in sight.
And the implication of that for the recovery is what's really interesting here.
How so?
Well, if faltering confidence was the key factor that pushed prices down, that raises a pretty big question for all of us to think about.
It is.
How much of the projected recovery depends less on the fundamentals,
Yeah.
Supply and demand, which moves slowly, and more on pure market psychology now that the bottom has been called. That confidence, once you break it, needs a very powerful signal to come back. And that's definitely something to mull over.